Good evening, ladies and gentlemen. It's a real pleasure to be back in Munich. This is the third time I've had the opportunity to speak at a DEG event, and I'm very honored to be invited back yet again. David, if you could take care of the slides for me, I'd appreciate it. Peter said I'm going to be short tonight. I'll talk about 10 or 12 minutes and to the point. The point that I want to make this evening, I'm going to tell you right now. It's basically that the euro is not the Deutschmark, the ECB is not the Bundesbank. Once you recognize that and understand that, you'll understand the reasons why you need to own gold and silver to help protect the tough times, help protect your wealth and your assets against the tough times that we've got coming. David? I always like to begin with this table. This is the price of gold appreciation against 9 of the world's major currencies over the past 10 years. There's very little red on that table. Gold continues to go up, but the reality is that it's not that gold is going up, it's that the purchasing power of currencies is going down. And the interesting thing about this table, regardless of which major currency you look at, double-digit rates of appreciation against all of those currencies over the past 10 years. I want to put gold into its proper perspective. You know, a lot of people call gold an investment. Gold is not an investment, it is money. It's fundamentally different from an investment, and I want to use this little table to explain that point. You know, with investments, they're wealth-producing assets. They generate wealth, they generate cash flow. You know, if it's a farm, if it's a timberland, if it's a factory, if it's an oil well, it generates wealth. Gold is just a sterile asset. It has no cash flow. It doesn't generate wealth. It protects wealth. That's why it's money. So when you're talking about gold, you're not talking about investing in gold. You're talking about saving gold because gold is money. So when you're looking at, not yet, when you're looking at gold, it goes into the bottom part of your portfolio, the liquidity part of your portfolio. And when you're evaluating whether you want to own gold, you evaluate it against other currencies of the world, other monies of the world. Keep in mind that even though we're not spending gold as a form of currency, although we're starting to do that now in gold money, gold currency can be, when you have money, you can do two things with it. You can save it or you can spend it. We're in a stage, because gold is undervalued, you want to continue accumulating it, you want to continue saving it. At some point in time in the future, I tend to think it's probably going to be 2013 to 2015, which is my long-standing forecast. We're going to be spending that gold, we're going to be buying undervalued assets, and we're going to ride the next boom-bust cycle. Thanks, David. This next chart, I want to use this to explain why gold is money. This is the price of crude oil against 4 different currencies, and I'm using a base 100 analysis here. In other words, I'm going back to January 1950, and I'm going to show the change in the price of crude oil on a base 100 analysis starting at 100 against each of these 4 currencies, so you can see exactly what's happened. This is the price of crude oil in terms of the British pound. Go ahead. This is the price of crude oil in terms of the US dollar. And what you can see right there is that as bad as it's been for the US dollar since 1950, from inflation, debasement, and all of the problems that we faced, it's even worse for the British pound. The British pound has lost more purchasing power because we're comparing both currencies against the same standard, a barrel of crude oil. Okay? The third currency is the euro, and prior to that, the Deutschmark. And I want to focus on this for a second because this is critical in terms of the point that I'm making this evening. Look at the chart at the bottom there, from 1950 until 2000. You can see that over that period of time, the Deutschmark preserved purchasing power very, very well. It basically had in 1970 the same amount of purchasing power it did back in 1950. That's very, very important to understand. What's also important to understand is look what's happening to the euro from 2000 to the present. It's looking more and more like what's happening to gold and silver, and I'm going to come back to that in a second. But before I go to the next chart, go ahead and click. This little red line on the bottom, that's the price of crude oil in terms of gold. An ounce of gold buys the same amount of crude oil it did today, buys today the same amount of crude oil it did back in 1950. This also explains why gold is not an investment. If you can buy the same amount of crude oil today that you could 60 years ago, who wants an investment like that? You want an investment that's going to increase your wealth. Gold does not increase your wealth, it preserves your wealth. Gold does what money is supposed to do. It's supposed to preserve purchasing power over long periods of time and enable economic calculation. calculate the price of goods and services with gold, and you get a very clear picture as to what's truly happening with our monetary system today. Now, I want to focus on this next chart, the price of crude oil from 2000 to the present. What I've done here is I've taken a base 100 analysis, but not back to 1950, back to 2000 when the euro was created. And you can see the price of gold continues to go, the price of crude oil in terms of gold continues to go basically sideways. But look what's happening to the euro. The euro is looking more and more like the dollar and the British pound. The euro is being debased. And we had the wake-up call last May after the politicians got together during the Greek crisis. And on the following Monday, Mr. Trichet said he's going to start buying government bonds. That broke the promise that the European governments made, that the European Central Bank was going to act like the Bundesbank and that the euro was going to be managed like the Deutschmark. We now know that that's not true. The ECB is under political control. The proof of it occurred last year, and we've seen additional evidence of that proof ever since. Whenever you have political control of the money gets destroyed. The purchasing power of that money gets destroyed, and that's what this chart is starting to show.